Hi, welcome to the Market Alert for Thursday, the 30th of July 2020. So gold hits record high, yields hit record lows after Powell Promise Fest. As the headline says here, this is for Wall Street. Please, sir, I want some more. And this just went on yesterday as the FOMC meetings unveiled. Gold futures near record high, stock surges, Powell promises to do whatever it takes. Now, how many times have we heard that line during the last 11 years, even with the previous incumbents of Yellen, Bernanke and co. As Powell's press conference began, he promised to do whatever it can for as long as it takes. Stocks and gold took off and dollar dumped, and that's going to be the important one. The loss of faith in the US dollar is gaining ground. And again, Fed goes in all in and promises low rates for longer to buy every dip until virus is gone. The path of the economy will depend significantly on the course of the virus. So it basically is just saying, listen, the checkbook's open and we'll do whatever we can for as long as we can until it all hits the fan, is what it boils down to. So that was the main news for yesterday. And the market news for yesterday, I wasn't at the desk yesterday. I was at a late friend's funeral, so I didn't see anything. I saw the first part of the session, and then after I left, the market picked up, gave us a sell signal, and traded down to the first profit target. We just pop this in here, and you can see there we've got the profit taken by those that were actually short on this move. And then the market rebound, and in the way here was the DP level. We also had some selling here, which you can see it's only a small amount, nonetheless. The price is back below the 20 bar moving average. We did get a close back there where we see the green bar, but then price is slammed for the second move to the downside. Nearly said second wave then. It's a bit like the virus, this first wave, second wave. So yeah, the second move to the downside there, trading down to the 200 bar moving average. And I'm looking at a way to actually introduce a signal for these types of trades. But again, you can eyeball these as the market unfolds. As prices start to trade back, you will find DPs or BRNs in the way. Then a close back below the 20 bar and 5 bar tends to bring with it a move to the downside. Just as on the downside here, you see the market trade down to the 200 MA. You see it trade back to it and then close back, which is the first indication that price is unlikely to change direction. Then in the afternoon, prices were sideways as the market waited for news. The news was released and the market moved higher. And again, during the afternoon session, notice how prices until this point hug the 5 bar moving average, which has been a new pattern that's been revealing itself. This is the third day the market has done this. Once it got through the 200 MA there as well, prices continued to do this and then just became lackluster thereafter, with prices hugging the 200 MA as the market waited for the FOMC minutes. They were released here, and you can see the market not really reacting. And then Powell opened his mouth and the market came sailing down to the 200 bar moving average, and prices coming off the low of this bar, closing halfway, volume very high, and then the market moving back to the upside. And that was obviously tracking the Dow, because this is the electronic market for the German DAX at this time. So a quick look at where we are in the bigger picture. We can see the market's in a range, but still offering some trades. As soon as we break out of this, then it's going to be fantastic, because then we really see the momentum build. But at the moment, we can see we've got a range there, which actually isn't too much of a problem, because we can use these ranges, the actual support and resistance, also as great places to trade off. But at the moment, the market coming back towards the 20 bar moving average and closing, or currently trading below, I should say, the 5 bar moving average. Overnight, we can see that prices have been moving lower, and of course they've traded down to the DP, the 200 MA found support, and then tried to move off this level, which you can see there. But currently broken this level, but you can see a bit of buying there as well, but below the 200 and the DP, and it needs to close back above this if the market is to move higher. I'm just going to reduce the chart. I want to have a look and see where we are in regards to the previous day's low, which is here. So any move to the downside takes out the BRN, the S1. This BRN also has the low, so any price movement down to this area is likely to see prices find support here. I will need to drive through if prices are to move lower. But that's the downside. On the upside, of course, we need to get back above the DP, the 200 MA, and then you can see the previous day's high as well. So again, it's always good to step back, have a look, see where we are currently trading and where we could trade, so that if you're in a trade, you know exactly where those resistance and support levels will be. Okay, in the implied volatility, we can see we're down to 21.16, which is not too dissimilar from where the market started to fall back in February, before we had the lockdown and the stock market started to fall sharply, which you can see there. Again, the lower this goes, the better. The bigger the correction will be in the market, which always turns up without fail, and even more so now. Rumours again of second waves, further lockdowns or isolated lockdowns, and more extended isolation periods, quarantine and everything else. The impact on the economic front will be massive, and by the time we get to September, October, as we go into the miserable weather, and people are more reluctant to leave their homes anyway, and with all of the measures in place in retail shops, etc., it's going to be very, very messy, I think is the word, and the impact on revenues is also going to be huge. At the moment, we've got to green in the implied volatility as the visual, but it wouldn't take a lot to switch this to amber and then back to red, where we see the increase in volatility being quite significant. Okay, news for today. To finish off with, we've got the German prelim at 9 a.m. and then the rest comes out at 1:30. And we've also got another increase in jobless claims. This is going to take us, we're heading towards the 60 million prediction that I made way back in March in the market alert. This takes us, it must be to 57 million. So I'm actually going to be wrong. It's going to be more, which is tragic, to be honest with you. So this will be out at, you can see here they've revised the figure up after last week being caught out with a new spike in jobless claims. Yeah, tragic to see, but yeah, that is what's happening later on today. Okay, that will do it for this one. If there is anything else to report, I will let you know, but as ever, thanks for watching. See you in the next one.